It's time now for a look at the day's business news, starting with America's central bank deciding to raise interest rates there. Well, our business editor, Stephen Carroll, is here in studio with more.
Sharon, this is the first time since 2018 that the Federal Reserve has raised interest rates as the central bank tries to tackle the highest inflation that the United States has seen in 40 years. The benchmark interest rate will rise by 1/4 percentage point, bringing the new target range to between 1/4 and 1/2%. It is a milestone for the US economy. Fed officials are now expecting to raise rates another 6 times this year. Inflation was running at almost 8% in February, and that was before the Russian invasion of Ukraine pushed up oil prices even further. Here's what Fed Chairman Jerome Powell had to say about the impact of the war on the American economy.
The implications of Russia's invasion of Ukraine for the U.S. economy are highly uncertain. In addition to the direct effects from higher global oil and commodity prices, the invasion and related events may restrain economic activity abroad and further disrupt supply chains, which would create spillovers to the U.S. economy through trade and other channels. The volatility in the financial markets, particularly if sustained, could also act to tighten credit conditions and affect the real economy.
The share markets had been expecting the Fed to raise interest rates. Wall Street got a major boost after the announcement. We're seeing a similar reaction from stock markets in Asia today. The Nikkei in Tokyo closing up 3.5% on that news. Also, the Hang Seng in Hong Kong soaring ahead another 5% today, the second day of huge gains. That was after the Chinese Vice Premier promised more support for the economy yesterday, so positive across the board on the Asian markets. We're keeping an eye as well on the price of oil, still hovering around $100 a barrel. Brent and WTI both up slightly in trading today. That was after a warning from the International Energy Agency that the markets could lose 3 million barrels a day of Russian oil from next month. Russia's president, meanwhile, has promised to raise the minimum wage and salaries of public sector workers as the country's economy is being hammered by Western sanctions over the invasion of Ukraine. Vladimir Putin also promised to raise pensions and other social welfare benefits. Since the war began, the value of the ruble has plummeted, pushing up the price of imported goods. Consumers have also seen shortages of some staple products due to panic buying. The International Monetary Fund has suspended a ceremonial role which was held by Russia's representative to the organisation. The move came after pressure from major shareholders at the fund, including the United States. The role of Dean was an honorary title awarded to the longest-serving representative with some ceremonial duties. The French government has announced plans to a package of measures to help businesses deal with rising energy and fuel costs. The package includes a tax rebate on industrial and agricultural fuels and grants to help companies cover some of their rising energy costs. The overall package worth almost €7 billion. Betica Bahel has more.
They're one of the hardest hit sectors by surging fuel prices, worsened by Russia's invasion of Ukraine. In protest, these farmers and fishermen blocked access to oil depots, saying that the rising costs have left them unable to do their jobs as they can't afford fuel.
I spend approximately between 750 and 1,000 euros per day. If this increase continues, we will have to close our businesses because we will no longer earn money but lose it.
The French government announced Wednesday a set of measures in response, saying that these sectors will receive additional help.
The government will provide exceptional financial aid equivalent to 35 cents per litre of fishing diesel from the 16th of March to the 31st of July. The scheme will be opened on Thursday so that all declared boats can go back to the sea as soon as possible.
As well as the fishing subsidies, the PM is set out to stop importing Russian oil and gas by 2027. By increasing France's import capacity of liquefied natural gas. Outside of specific sectors, the package will also extend on the 15-cent per litre fuel discount the government announced for all last weekend, now broadened to include natural gas, as well as prolonging any state-guaranteed loans set up during the pandemic. The government had already capped power and gas price hikes since COVID, offering lower-income households financial help to cope. But France's finance minister said it isn't a whatever-it-costs approach, with companies now having to meet certain conditions to access the funding.
Finally for me, Netflix is cracking down on people sharing their accounts between different households. the streaming giant testing a new strategy in Chile, Costa Rica and Peru, where if you try to transfer a profile to a new account, you'll be asked to pay an extra fee of around $3 a month. Netflix says they're trying to resolve what they call confusion about when and how accounts can be shared. They say the practice of password sharing, which is widespread, I can attest, impacts their ability to invest in new content. Sharon, I'm sure you have your own Netflix account that you don't share with anyone.
I don't actually, Stephen. It's just for me. But it's a handy revenue boost for the company, isn't it?
Well, at a time when they're trying to produce more and more content and in an increasingly competitive market.
Exactly. Something we can expect to be rolled out sooner rather than later, I would imagine. Well, thanks, Stephen. Stephen from our business desk, our business editor, thanks for joining us with that update.